All right, hi everyone. Thanks for joining us here today. To kick off the webinar today, we'll do a brief introduction of ourselves and AcreTrader, and then we'll hop right in and do a deep dive and overview of the offering here. So today we're going to be talking about the Little River 239 acre tract in the boot heel of Missouri, one we're excited to dig in with you here today. Some standard disclaimers to start us out. Quick background on the two presenters today. Myself, a lot of you have heard me on these webcasts before, the founder and CEO of AcreTrader. Matt Pope, who joined our team recently, one of our newest additions. Grown up in agriculture his whole life and investing in agriculture in particular. So we're really excited to have him here and speaking with you today about this farm. More importantly, I wanted to zoom out a little bit and show you that usually there's one or two of us on these webinars, but it really takes a village. And I think this farm's a good example. This is a picture of each of the people that were involved in getting this across the line and onto the AcreTrader platform. I am ignoring, of course, the importance of our software engineering team as well. But these are the people that have directly touched and or interacted with this transaction specifically. Importantly, on the top right here is Matt Pope. And so I'd love to dive in a little bit and have Matt perhaps introduce yourself a little bit to the investors here and just share some of your background and previous experience.
Yeah, absolutely. Thanks, Carter. So first of all, this picture was taken 2 days ago. My family and I live about 45 miles from the offering today, and we drove up 2 days ago to look at the farm. So this picture was actually taken on the property, and that is my 7-week-old son, Fitz. So just a quick introduction. I grew up in Eastern Arkansas in a family that's very much been tied to agriculture in a variety of ways, both through production and investment. I was fortunate enough to have been able to grow up around someone who was deeply involved in the investment side of the business, and so I was able to look at property with him. And in fact, some of the fondest memories I have as a kid were being able to look at property out west with him and make some of those memories. And we've owned farmland virtually all of my life, so it's certainly a business that I've grown up around. In college, spent time working for a gentleman that farmed several thousand acres here in Eastern Arkansas and ran a small brokerage and appraisal office that really catered to a variety of institutional clients as well as large lending institutions. And this took me all over the Delta. It not only helped me better understand the very nuanced farmland real estate market, but helped me begin to build out what has become a really valuable network of market participants all over the country. Following my time there, I spent about 2.5 years at an institutional agricultural asset manager where I led our asset valuation efforts and was able to work on projects with acquisitions, farm management, all the way to disposition of properties. And my time there really broadened my scope from having just looked at property in the Delta. It offered me tremendous experience in just about every major market for agricultural real estate. It put me in front of almond development deals out west and in Australia, to looking at property in the Southeast and just about everything in between. And so over the past 3 weeks at AcreTrader, I really jumped right in. Ben, who leads up our farm operations, and myself have been able to build out a pretty robust pipeline of opportunities across the U.S., representing multiple geographies and crop types and totaling some 20,000 acres.
Awesome. Thanks for that, Matt. And with an appraiser's background, maybe I'd love to ask you a couple of questions here. But we see farmland anywhere from $3,000 to $30,000 or even $40,000 an acre, depending on where it is in the country. What are some of the biggest value determinants that you look for when sourcing land?
Yeah, so this is a really good question. I think one of the most important things to realize and to think about when we're vetting deals in ag is that while there are some fundamental factors that influence value across the market spectrum, that is things like climate, soil, water availability, we have to understand just how localized agriculture is and how important it is to have relationships, expertise, and understanding that allow us to properly underwrite deals, because all of these markets are unique and they all behave very differently. So across the board, we need to work hard to understand the micro picture. We need to get a feel for the area in which we want to buy, the overall health of that market. And so with that, we want to fully understand what's driving market value in that particular area. So there are a tremendous number of determinants depending on where you're looking for farmland. It could be something like the availability and cost of water in places out west, or it could be tenant availability in markets in the Southeast.
Great. And you mentioned you've grown up and been in and around the industry quite literally your whole life. And so what are a couple of trends that you've been observing that you think will play a big role in ag over the next 10 years here?
Yeah, so in our industry, we've seen unprecedented innovation and change over the past, say, century, and today's really no different. There are so many trends influencing this industry right now, from labor costs informing what crops are grown in what markets to ever-increasing mechanization and very real shifts in consumer preference that really change how we raise and produce food. So there's a lot to be excited about. For me, though, having the opportunity to be at the forefront of making investment in agriculture accessible and realizable, I think that's one of the most exciting trends. And frankly, it's why I'm excited to be here at AcreTrader.
Awesome. Well, thank you, Matt, for introducing yourself and speaking a little bit about your background. We will hop through some slides about AcreTrader and about farmland investing, and then we'll hop back to you, Matt, and really have you dig in on this particular farm and discuss what we see in this. So as many of you are aware, the AcreTrader solution is very simple for the investor. Our large and growing here sourcing team identifies offerings and parcels by working across the U.S. Each of those are in a unique LLC that the investors then own, and AcreTrader manages from end to end, making that a truly passive investment for the investor. With AcreTrader, and why we're excited to be part of this market is what it comes down to is providing a lower fee and easier access for investors to have exposure to this exciting asset class. As with any investment, we do extensively diligence each farm, but we also encourage you to do your own diligence and/or speak with a financial advisor. And we wanted to put in some new data here today. We've just joined the NACREF, which is the Industry Farmland Performance Index. Got a lot of really great data helping us to further our data analytics and underwriting efforts. And interestingly, they had some cool performance data we were able to pull out. So this is sourcing from them. And what you can see here is returns profiles across some various asset classes. I think what perhaps most interesting is the Sharpe ratio here on the bottom. This is how many, if not most, professional asset managers measure risk and rewards. Risk-adjusted returns. So sure, you maybe put up a massive return, but you did so by taking on an even larger amount of risk. And so the Sharpe ratio, achieving anything above 1 is viewed as generally as pretty exceptional. And you can see that here when compared with the S&P or Russell or even commercial real estate. But farmland at a 1.2 Sharpe ratio is a pretty exciting data point. Many of you have seen this on our website, so we won't dig into it much. But again, I think what we're excited about is just not only how well farmland has performed, but how relatively low the volatility of that asset class has been. And we also see a lot of geographical concentration across the states in terms of the dollars and the acres producing agricultural commodities and outputs. And you'll see here that Missouri is one of those focal areas for us, as it is here in the list of important states, if you will. And what makes a good farm? We talk about this a lot. You can't just go out and buy a farm and achieve great performance. And so we often say our team eliminates 99% of the farms to get the ones to the platform. And these are some of the things that we look at to be overly simplistic. Soil, water, and financial profile are really the things that matter. And then there are many additional sub-variables that we take into consideration through underwriting. And that leads to the farm today, and something we're really excited about putting on the platform. It's been a historically productive cotton farm. It's located in a strong area with great groundwater, a good tenant base, several gens to deliver that cotton to, as well as grain elevators for the other crops grown in the area. There are some loam and clay loam soils on this farm and has some great irrigation capabilities. So it makes it pretty well suited to produce most of the crops that are predominant here in the Mississippi River Delta. So with that, I'll then let Matt actually dig in and talk about this specific farm.
All right, thank you, Carter. So here's an expanded view of the region. You can see this farm is tucked into the southeasternmost corner of Missouri, and that's an area that we refer to as the Boot Heel. It's just a few miles from the Arkansas state line. If we zoom in a bit, you can get a better idea of where exactly that farm is. And so I want to start by saying that we think this is a great opportunity to bring to the platform what Carter referred to as historically productive cotton farm, and it's located in a strong market area. The farm offers the ability to further diversify through new geography and crop type. This area is the northern tip of what we refer to as the Delta region, and it's characterized by excellent groundwater, broad pool of tenants, and diverse crop optionality. And in fact, my family and I live in Jonesboro, which you can see toward the bottom of the map on your screen. And I drove up, as I mentioned, 2 days ago to look at this farm and saw on the way corn, beans, cotton, milo, rice, and peanuts all in that area. So the area is certainly diverse in terms of its crop suitability. Specific to today's offering, the farm's loam and clay loam soils, as well as its irrigation capabilities, make it well suited to produce just about anything that is grown in the Delta, but you're typically going to see it planted to cotton. So your crop optionality on the property expands far beyond the traditional corn and bean offerings. In addition to those crops, the farm can raise cotton, milo, and could produce peanuts on its lighter western portion. So you can see some of the highlights here. Something that's not listed, but certainly is worth noting, is that this farm is an off-market deal. And it's been owned for about 20 years by a local cotton farmer in Jenner, who will be staying on to farm for us. The offering price equates to $6,190 per tillable acre. And worth noting is that we have a number of very good comps, all of which are within, say, 10 to 15 miles of the property, and all of those are about 12 to 24 months older within that time frame. And we use those to vet this deal and really believe that we're buying this farm at a very attractive price. I think something else worth mentioning here is that this region has seen some positive pricing and value pressure tied to healthy market conditions and broad participation from farmers and local and regional investors. That's notable because just south of here in Arkansas and Mississippi, you see a lot of institutional investor participation. And that's largely been one of the big driving factors in capital appreciation over the past few years. So fundamentally, we like the transactional volume that you're seeing here, the local participation on the part of farmers and investors alike, and the price at which we're able to buy this farm. So paired with the optionality that we've talked about, we think this is a great opportunity. So before we move on, you can see some of those additional financial highlights, specifically your gross yield and your IRR projections. All right. So this area is between the Delta and the Midwest and has some value influences really from both regions. It not only boasts the highest land values in Missouri, which is mentioned on this slide, but some of the most valuable land in the Delta. And you can see here at the bottom of the slide that according to the ASFMRA's study, annual survey, irrigated cropland is generally trading hands north of $7,000 an acre. And we're offering this farm at $6,190 per tillable acre. So again, we feel we're able to enter into this at a really attractive price. All right. So quick cotton production overview. Cotton first began growing in the boot here in the 1920s. Around that time, boll weevil infestation in Arkansas moved planting north. And so you can see here on the right-hand side of your screen a picture of a cotton plant, and that is on the farm. I took that 2 days ago, and it was not a great day to go look at property. It had rained about 1.5 inches before I was able to get up there, so it was a bit wet. This cotton was planted May 14th, and generally speaking, in this part of the world, you're going to see cotton planted from mid-April really to mid-May. And so while this was a bit late, generally speaking, at this point this year, only about 50% of the crop had been planted. So our farmer here was a bit ahead of the curve. And so it should be ready to be picked in about 2 weeks. And you can see here the cotton bolls on the plant. Each of those bolls contains between 25 and 45 seeds. And each of those seeds grows between 10,000 and 20,000 fibers. And that's the white part that you're seeing there. That's the length. And so after the farmer comes in and picks this in about 2 weeks, he'll take it to a gin. And that gen will separate the seed from the lint. And most of us, when we think about cotton, are most familiar with that lint. It's used in production of clothing and a variety of other things. But that cotton seed is also used to produce a lot of different products, most notably cooking oil. It's used for livestock feed, for fertilizers and things of that nature. Quick sustainability highlight here. New irrigation techniques in the Delta have reduced water usage by about 50% over the past 20 years ago, which is certainly significant, and reduced soil tillage and fuel use, greenhouse gas emissions as well. So we'll move on to the tract analysis now. We noted earlier that this tract does have good soils. The soils on the western side of the tract, you can see here at Gideon Loam, those are very good light soils, highly adaptable. And then we've got good clay loam soils on the eastern side as well. And the property is irrigated by a center pivot irrigation system. That system is about 10 years old, and it's located, the pivot point is located there on the western central portion of the farm. And as with our other Delta offerings, one of the great things about the Delta market is that you've got highly reliable groundwater just about in the entire area. And that's no different here. We get about 49 inches of rainfall annually and have a very good water profile on the farm. All right, quick financial overview. We're looking at a 3.4% gross cap rate, expected IRR of 8.4%. And one thing to note here is that we underwrote this deal at $210 per acre rent, which we felt was somewhat conservative. And so that really reflects here in this somewhat conservative estimate of our gross cap rate and our IRR.
All right, great. We will hop into some Q&A here. And looks like you guys got a lot of questions. So per usual, we'll try to get to all of them. If we are unable to, please follow up with us, or we'll circle back with you to make sure that we get the questions answered. All right, so let's see, Matt, if you want to start maybe on the question is, what accounts for the below market per acre price? So you've had a long history in this area and with the with this particular farmer or farm, so I'd love to hear your input a little bit there.
Yeah, absolutely. So again, our decision here was informed by some really good and very close comps. The farmer is one who I've been working with for the past couple of months on trying to buy several different properties, and he offered this one to us before he took it to the market. And so we were able to get in there. Timing worked out great because he found another property that he wanted to buy and 1031 into. And so that's really what drove that price down and allowed us to get this thing at such an attractive point.
And I think Matt brings up a good point there, something we don't talk about a lot, which is farmers do utilize 1031 exchanges to invest in new farms or to move farms maybe closer to their operations or something contiguous with their own land quite often. Those often need to take place quickly, and that is a large value that AcreTrader brings to the market is fast transactions. And sometimes that time is a very valuable and monetarily so valuable component of a deal. And so in this case, for that farmer being able to transact very quickly and also do a sale leaseback, something that's quite often not available in these markets as well, as many of the buyers are farmers that want to move on to the farm themselves. So in this case, that also is an incentive for the seller to work with us and provide us an attractive entry point, is because they're able to continue farming their land while freeing up some capital, whether that's for 1031 or buying new equipment, et cetera. And then, Matt, we've got a question here about what does rain do to the quality of the cotton, and how does that pertain to the price that you're given selling cotton? And I want to note here that this is a question of certainly Matt will speak to, but the question around crops specifically often pertain to the farmer as opposed to us as the landowner. And as a reminder here, in most row crops that we do, including this one, the landowner is paying us a rent, and they take on the operational risk and upsides and downsides that come with individual growing seasons. But
Yeah.
Matt, it's a fun question, so love to hear you talk a little bit about rain and cotton.
Full disclosure, I am certainly no cotton farmer, but to answer the question, generally speaking, if you're getting rain in the early spring, it can really influence when you're able to get your crop in. And later in the year, it can also influence when you're able to get that crop out. During the growing season, you're not seeing a tremendous amount of rain in most cases. That's what we've got the center pivot out there for, that we're able to irrigate that property at just the right times when that crop needs the water.
Great. And Matt, perhaps you could talk a little bit about this question around, will this farm grow cotton for the entire 5 to 10 years of investment?
Yeah, so that's a great question. For the next 3 years, I've been in communication with the tenant, and he is a ginner and is primarily a cotton farmer. And so it will be in cotton at least for the next 3 growing seasons. Now, after that, we will reevaluate. We may stick with him as a tenant, or we may move to someone else, but it will be in one of the crops that we've mentioned. So, more likely than not, rather, it's going to be in cotton, but it could also be in corn, could be in soybeans.
Great. And then a few questions around flooding from the Mississippi River. So perhaps you could talk about the distance this land is from the Mississippi River and the fact that you're out there just a few days ago after really heavy rains without material issues.
Yeah, absolutely. So this property does not have a significant flood risk. If you've looked at the aerial map, you'll see on the east side that it is adjacent rather to a levee, and that is part of the Little River drainage system. That drainage system was developed around the turn of the 20th century and is responsible for draining about 1 million acres of farmland in this area. And so, again, the property is on the protected side of the levee, so does not assume a significant flood risk of any sort.
Great. And then we have one about how does this compare to other AcreTrader offerings? First, I will say that we are not investment advisors, and so we have to be very careful, and we do not advise investors to invest in one farm versus the other on our platform. What I can say, factually about this farm is Matt, who's been working on this type of thing his whole career, basically, aside from being in the Marine Corps. In his first days and weeks here at AcreTrader, this is the thing that he brought to the table and was most excited about working on. So we've been doing some pretty extensive work here, and are certainly happy to bring this to the platform.
Yeah, and one other thing to add on to that, Carter, I mentioned earlier in the presentation that I think this adds, or one of the exciting pieces about this is that it adds or allows us to bring to the platform a farm that adds geographic diversification, crop diversification. And so not necessarily just your straight corn and bean farm. We're able to see some crop optionality here. And I think that's an exciting piece.
Great. And then Matt, perhaps you could answer about the rental rate here for the first 3 years.
Yes, so the rental rate will remain fixed for the first 3 years, and it'll actually be paid, the first years anyway, will be paid upfront at closing. The remaining 2 years there will be paid at the beginning of the year. And so after that 3-year period, we will reevaluate, we'll determine if we want to stick with the current owner and current farmer as a tenant, or if we want to move to a new tenant.
Great.
But again, I would like to highlight that $210 an acre rent is we think a well-supported rent. I think it's a conservative estimate.
Yeah, I think especially given the recent momentum in commodity prices, which has been very, very helpful to farmers at this time of year. And to follow on that comment, Matt, I think we want to say out loud that we like this farmer and would like to continue working with this farmer for many years beyond the 3-year period here. And then let's see, around historic yields and rent estimates, I think we've touched on that a good amount here. I'm certainly happy to follow up on those questions individually. around the data supporting that and our outlook for rent prices in this area. As a reminder, in our underwriting for farms, we do not assume increasing rent prices through the life of ownership. I think that the historical data strongly makes a case that rents remain stable or increase over time. I should say. And again, that's not something that's currently built in here, but we very well could see. Matt, I'm not sure if you're able to see this question. It's a long one about boll weevils. And so, want to see if you wanted to dig in there a little bit.
Let me read through this one.
And perhaps while you're reading through that one, I can, it's a long question, a great one, we appreciate it. But there's another question around this farm carrying the same risks as the other boot heel potato farm that we did we had on our platform a month or two ago. And the farming region is similar, where it's an area that we are excited about to having exposure in from a diversification standpoint anyway. And this farm is a different soil profile, and it's a little bit heavier of a soil profile, and so less prone to growing potatoes, which was the case with the previous boot heel farm, and more for cotton, but both of which we do see as attractive crops. All right, Matt, you want to talk about some boll weevils?
Yeah, I'm still trying to find, I'm scrolling through here trying to find that question.
I've got
Here
it,
we
sorry.
go.
The GoToWebinar is kind of difficult to navigate for Q&A, everybody. So we're sorry, it's a little tough to read. There's a teeny tiny print here.
Yeah, so the question is, tell me about boll weevils. Do farmers worry about that now? How do farmers protect against them? And so the answer to that question is boll weevils historically were a big concern. Now that's not necessarily the case. And so they cut stalks so the weevils can't burrow and hatch larvae in them. And that is really a concerted effort that's taken place over, say, the last almost 100 years, probably closer to 75. And so it's not nearly as much of an issue as it was historically.
Great. And you also want to speak to the question around maintaining irrigation equipment on the farm?
Yes. So we've got one center pivot irrigation
base
system.
Question is around, yeah, the question is just around who's responsible for maintaining that equipment, which is outlined in our understanding and agreement with farmers, if I recall correctly. That's usually a farmer responsibility.
Correct. And depending on what part of the pivot system we're talking about, the farmer will cover up to a certain amount of that maintenance, and then we'll step in and help out with anything over that. And the pivot's been relatively well maintained. It is just 10 years old. So it has another, given the appropriate maintenance schedule, another 20 years of useful life, if not a little bit more.
Great. And yeah, we're going to have to wrap up soon. One, we're running out of time. We're at the 30-minute mark, and two, it sounds like our audio is not doing well. So I'll tag up on the next few questions here. And then again, we apologize if we haven't gotten to all of your questions. We will try to reach out to you immediately, and/or please feel free to chat or email or call us as well. So one is around what happens if I need to get out of the investment before the 5 to 10 year period. For us, there's two approaches there. One is the securities exemption that we operate under for doing 506C offerings on our website is a minimum 1 year lockup period. So when you invest in the farm, there's a minimum 1 year lockup. We do ask everybody to invest for the long term. We're not here to flip and play around a ton with prices. And so we do ask you to view this as a long term investment. However, after that 1 year mark, if you would like to, you're able to sell to somebody that you may know, friend, family, etc. And then certainly we can help you with that to the extent we can. We are also actively working on our own secondary market. It's a project I've been working on here for well over a year and too hard on. There's a lot of regulatory considerations that we want to make sure to get right in the best interest of our investors on the platform. But that is something we're working very heavy on right now. And then lastly is, will you sell the carbon credits from the farm? The farmer, for adopting certain practices, may have the opportunity to sell those credits in the future. We certainly encourage that activity. We believe that that's a great investment in the soil to sequester carbon and increase organic material in the soil. And so certainly we're big supporters of those routes. And again, the farm's going live here in 30 minutes. So we've changed the schedule a little bit to launch farms on the same day that we do the webinars. Certainly, if you have questions, considerations, please reach out to us. We want to make sure that we answer any and all of your questions or concerns about this farm. But we are very excited to get this live and to speak with you and answer any more questions you may have. Thanks so much.
Thanks, guys.